I'm Nick Grove for Morningstar.com.au, and today I'm joined by Morningstar's Alex Pronaeus. Alex, why is it important for investors to consider ETFs, and what are a few of their benefits?
Well, I think the reason it's important to consider them is because of those potential benefits that can be there. So there's things like they can be incredibly low cost, they can be tax efficient, the transparency that you get with things like regular portfolio disclosure. So generally you know exactly what you're investing in with an ETF. So those types of benefits are very good reasons to at least look at the structure. You're not necessarily guaranteed, or you're certainly not guaranteed to get all the benefits of ETFs in every single product. So I think it's important to think about what products and which particular benefits are most beneficial to you.
And just secondly, Alex, in your presentation you mentioned a couple of ETF investing rules of thumb. What are a few of these rules?
Well, there are things like just trading when the ETF is fully up and operating. So we suggest avoiding trading in the last 15 minutes of the day, avoiding the end of day auction period, avoid the first 15 minutes. Basically, you want to just make sure that the market maker has had time to be fully up and running behind the ETF. And also you want to trade when that underlying market is in full swing. So, for example, for something like an Asian equity ETF, you'd want to trade that in the afternoon after the Hong Kong and Singapore exchanges have opened up. So there's more transparency, more liquidity as to the true price of those assets, and so the ETF can then price itself with a narrower bid-ask spread.
And just finally, Alex, what is Morningstar's mark of quality when it comes to an ETF?
We look at, there are 5 key factors that it boils down to. These are people, process, parent, performance, and price. So some of those might speak for themselves. Price, obviously, you want the cheap or cheapest ETF that does what you want. Other things might be a little less obvious, so we consider things like the strength of the parent organisation, because that speaks to things like the likelihood that that parent company is going to treat investors well, continue to innovate, continue to pass on the benefits of ETFs. So, for example, are they going to pass on cost reductions to the end investor?
Alex, thanks for your time today.
Thanks, Nick.
I'm Nick Grove at the Morningstar Individual Investor Conference in 2015.